Grand Parade Investments is a Western Cape-based empowerment group which has interests in Grandwest Casino and Burger King, Dunkin Donuts and a stake in Spur. It has a market cap of 1.37 billion rand and has no PE because it made a loss, and a dividend yield of 8.6%, although I think that's historic. So Grand Parade selling all its casino and gaming interests, which has raised good capital, because this is very capital intensive to push their Burger Kings and their Dunkin Donuts basically.
Yeah, so they are going through a sort of a transformation really, where they were a bit more broad-based in terms of gaming and leisure and food group, and becoming more focused particularly on the food services and those brands that you mentioned. So they've done really well with the gaming assets. We are seeing quite a lot of consolidation in that sector between Sogo acquiring from them and also Sun International. So they've got natural buyers for the assets. So they have raised a lot of money, over 600 million rand in their recent set of results, and deploying that into Burger King, which is a little bit further down the growth trajectory, and then the newer brands, Dunkin Donuts and Baskin-Robbins as well. So interesting what they're doing. I think they have quite a lot of ambitions. I think their sort of initial foray with Burger King, maybe they sort of rushed into it a little bit, expanded too quickly. They've learned quite a lot what the consumer does like, doesn't like, and very importantly, where to position the stores. Drive-throughs are very important. So it is gaining more traction, and that one is looking better, lower losses than in previous periods. But they've still got a long way to go in growing that and the other brands as well.
I think what's an interesting trend we've seen is that these big international brands, Burger King, Starbucks, Domino's, they've almost pushed these smaller South African businesses into being the sole franchisor. They haven't allowed Grand Parade or Taste to go and find further franchises to help with the financing. They obviously want to deal with one company. So it's pushed these companies to be heavily capital intensive. Yes. So where Grand Parade is fortunate is they had those solid Grandwest assets, which they've sold off. They've sold a few properties. They even sold the properties of the catering business that they bought for 50-odd bar. So they do have access to that capital, and then they're slowly phasing in the growth of these brands.
Yeah, so, and you know, if you look at something like Famous Brands, they had a capital light model because they got the franchisees to invest in sort of the bricks and mortar of the stores, where you're right, these expansions, they're having to have corporate-owned stores, which means they, as the owner or the sort of brand holder, having to do significant capex. So it makes it a lot more capital intensive up front, and we're seeing that put some strain on balance sheets, or they're having to raise capital in the case of Grand Parade. But the sort of returns down the line should be better, but I guess the risk rewards are magnified because of the capital required.
And that Burger King brand, it's pretty solid. Dunkin Donuts is well known. I think they probably make more money from their coffee than their donuts.
That's right.
Do you think those brands are going to be successful in South Africa? I mean, Burger King had queues for days, know, for a while.
Yeah, so there is, you know, they're well-known brands, and I think, as you say, the sort of South African consumer knows and enjoys these brands, and as there is demand for them, but you have to keep people coming back, so the quality of the product has to be good, the price has to be good, and sort of the convenience has to be good. So I think that's where they've been sort of working their model a little bit, but they do seem to be getting it better. So it does look, I think, for Burger King quite positive. They sort of are a meaningful challenger to someone like McDonald's, which has a big presence in this country and a good alternative. So yeah, I think that will do reasonably well. I think Dunkin Donuts can do well. They've got to get the product mix right. As you mentioned, coffee is big overseas.
It's not very healthy, Dunkin Donuts. It's deep fried carbs and sugar. So, you know, those kind of trends aren't really going in their favor.
No, but the South African consumer, I think, you know, likes that type of food. So, and it's a bit of a, you know, lower cost type of model to set up that type of store. So I think in a healthier consumer environment, they would do better. So I guess you've got to look through the cycle and say they're laying down the foundation. When we do see a turn in the consumer cycle, they'll be there to benefit.
So you're sounding quite positive on this one?
Yeah, the management put out an NAV, and they're quite bullish on the NAV. They do a DCF for the Burger King business, and they've got those other gaming assets still and quite a bit of cash now. So I think they're saying it's at like a 60% discount to NAV. So if you believe that, and believe in the brands, I think there is value here. So yes, hot.
So you're hot. You're going to be hot. I'm going to disagree with you on that one. It's just a bit small, a bit risky. I think the capital requirements are going to be pretty heavy going forward, so I'm not willing to take that risk. I'm not going to be hot on that